Alrighty, Q1 GDP is out, and it's not looking good for the U.S. economy. The expectations on Wall Street, based on what all the wizards of smart had been saying, was like 1.9 or 2%. Let's say 2%. And the number came out almost at 1%. It was 1.1%. Totally anemic, well below the rate of inflation. Well, actually, supposedly real GDP is accounting for inflation. So they're saying after inflation, we still had a 1.1% rate of growth. If you factor in what the real rate of inflation is, which I haven't checked in the last few weeks, but it's probably understated by at least 5%. GDP growth in real terms is well into negative territory, but based on the official government metrics, it's still just barely positive. But even with all of the rigging that the government does, the cooking of the books, they can barely keep GDP growth positive. And so the response from the stock market, as you all might imagine, is quite positive. The stock market loves when we get bad economic data. Bad news is good news, we're told, because it'll make the Fed more dovish. And everyone knows when the Fed gets dovish, the only folks who benefit are those who own assets. And so the drive then is to try and purchase as many assets as possible if you think that the Fed is going to become more dovish. That's the trade. Buy any asset. Doesn't matter what it is, because they'll all go up if the Fed cuts rates. That's the logic here. And because the rest of us are suffering, again, this is the logic, because the rest of us are suffering economically, because inflation is well in excess of the national income, or growth in the national income, because we're all getting poorer, because the cost of living is rising faster than our incomes, people on Wall Street will get richer. That's the Fed's solution. And the smart traders on Wall Street know that. Because the Fed, if they make the stock market go up, everyone will watch the news and be told, oh, the stock market's up, that must mean that the economy is doing well. And even though in your personal life you're still going to be doing just as bad as ever, if not worse, you will somehow feel better and be less likely to rise up against the elite establishment, because the newsman on TV will tell you everything is fine because the stock market numbers keep going up. Even though that has no bearing on you, because you're likely too poor to really take advantage of growth in the stock market. Now, apparently the Fed was forecasting not too long ago that Q1 GDP growth was going to be 3%. And it ended up being all the way down at 1.1%. So it would not be shocking then if Q2 GDP growth was actually negative, even on the official metrics. Now, we had 2 consecutive quarters last year of negative growth, even after all the rigging and the cooking of the books. But the White House conveniently, just before that happened, redefined a recession so that 2 consecutive quarters of negative GDP growth was no longer considered a recession. Now, my opinion is, since you, if you factor in the correct measure for the rate of inflation, we have had negative real GDP growth for many quarters now. We've been in a recession this whole time. It's not shocking that last year we had 2 consecutive quarters of negative GDP growth, and we are on deck now for another one this coming quarter in Q2, which we're currently in right now. Because all of these quarters have been bad. And they likely all would have been negative actually, no, I can guarantee you, because I know what the numbers are. And for those of you who want to know when I'm citing the real rate of inflation, go to shadowstats.com. The federal government has continually updated the way in which it calculates inflation to make inflation lower and lower over the years. Shadow Stats keeps track of what inflation was if you calculate it the way it used to be calculated, and so they actually have a constant measure. What the federal government does is every few decades they update and completely change the way that they count inflation to make it lower. And so the current measure that they use way understates inflation. They have these, they use these concepts like hedonic adjustments, in which they say, sure, we're forcing you all to buy electric cars, and they're really, and a Tesla costs much more than, a Toyota Camry did in 2010. But a Tesla is so much better of a car than a 2010 Toyota Camry that actually, when you factor in how much more value you're getting from this car because of all the technology it has and the big widescreen display, a Tesla is actually cheaper than a 2010 Toyota Camry. And so therefore, there is no inflation in car prices. Car prices are actually going down because cars are just that much better, that it accounts for all of the price increases and more. They play crap like this. They do the same thing with with everything across the board. They can't do it with something like ground beef, but they do it with everything that they can so that it averages out. So you have all these things that are, prices are rising, and they are actually, officially, the federal government says the price is going down in real terms. And hedonic adjustments are just one example of how they read the inflation number. So yeah, we're going to have, again, in all likelihood, Q2 going to be a negative quarter officially. That probably will signal the Fed pivot. And then, of course, we have First Republic Bank, which I think is up a couple bucks today, or maybe like $1.50. Everything was up today, though, so I mean that's not really shocking. I mean, First Republic Bank is not coming back. There's still a single-digit midget. Having a bad GDP print did not make First Republic Bank more solvent. I'll put it that way. And so they're the next they're on the frontier right now of defunct banks, and there likely will be more. That will also factor into the impending Fed pivot. So anyway, I'm not saying you should go out and buy stocks. I'm just saying I won't be shocked if stocks now make all new time highs because of this hysteria. I'm someone who will never invest in the stock market because it's not an investment. I kind of understand how the stock market works, but because I understand how it works, I would never want to put my money in it because it's not logical, and that just makes me so uncomfortable. So anyway, with that said, I will see you folks back here tomorrow.